There's so much that blockchain can do. And so being able to help develop a more mature experience and help others promote the growth of that industry is really powerful.
Hello, everyone. Welcome to another episode of Test, Optimize, and Scale. We're going to be speaking about compliance, about legal, and in the world of Web3, blockchain, a space that this is the most important and relevant topic. I'm joined here with Mark Cianci, legal expert, counsel over at Ropes and Gray LLP in Boston. Mark, pleasure to have you on the podcast today.
Thank you for having me, Jason. Great to be here.
I know I've enjoyed our discussions about the industry, current state, where it's going. Looking forward to informing, educating viewers, listeners further, but thought we'd start with your background. How did your career begin? How did you get into the world of law? And what brought you to this emerging space of technology?
Great place to start. And even before I get in, I will provide my standard disclaimer at the beginning, which is that I speak for myself. I don't necessarily speak for my firm, which is comprised of over 1,000 lawyers. And the comments that I have here today are not legal advice. They're not financial advice. It's more broad perspective based on what I've seen in my time. So with that disclaimer, to answer the question, I've been in practice for 13 years. I am a litigator. I do high stakes litigation work for a broad range of clients. That includes institutional clients, that includes operating clients, from the very large to the very small. And I got into this world largely because from a youngster, I had a vision for advocacy, for the nitty-gritty back and forth of taking a position, trying to do my best job advancing that position, and ultimately enjoying the sparring involved in that professional set of experiences. And so that is what led me into the litigation practice. Within that, I have a very broad focus, but certain subsets within the broader litigation range have comprised a more heavy concentration of my work, including securities litigation, fiduciary duty and derivative litigation, a lot of complex commercial litigation, some insolvency litigation, even some government litigation. And that's really a byproduct of who my clients are, what their needs are, and whether I am well positioned to take on those responsibilities as the needs emerge, hence my fairly general broad practice.
And how do you go back and forth from security litigation to anything fiduciary to an insolvency? Do these feel like the same type of approach for you, that sparring match and looking at precedent, looking at the case? Is it difficult to go back and forth for your clients on a hour to hour, let alone day-to-day basis?
I would say it's rewarding, it's challenging, and it's certainly not easy in the sense of you can turn your brain off, but I don't think it's difficult in the sense that a lot of these bodies of law reinforce each other. By that same token, the diversity of clients and the variety of perspectives that I've been able to develop in servicing these clients actually enhances the work that I do for all of the clients broadly. So for example, if I'm working with a startup company, and we can talk about litigation. I also want to pivot to some of the advisory work, but just within the realm of litigation first. If I'm working with a startup company and they're in a suit, I can bring to the picture the experience that I've seen working with very large companies such as Google, or very large private equity companies such as TPG, and their litigation, and essentially make that more micro for the smaller client, but use the same skill set, use the same experiences, use the same best practices and strategies that have worked for larger clients on behalf of a smaller client, and hopefully produce similarly viable outcomes for them.
Which is a massive value. I actually share a sentiment there. as I worked with big brands, Fortune 500s on advertising before starting the agency, and see a real utility being able to work with startup to mid-market organizations with that same mindset, with those same tactics. I actually take it vice versa. And when working with larger brands, let's say it's a larger fintech company, an exchange, an investment bank, by having that entrepreneurial marketing approach, they're able to do launches to have it in a more lean fashion. So I see it go full circle. And I know you mentioned high stakes in our conversations, being able to settle a suit, being able to win a case, being able to be on either side for your clients could be the difference of hundreds of millions of dollars. And can you speak to that a little bit? Are there differences from one case to the next in that regard, or what changes in terms of depth when you're playing at that level in those leagues?
Well, I like to think of it this way. There are some cases that I handle where the potential exposure is in the billions, and then there are some cases that I handle where the potential exposure is in the single-digit millions. Now, what I will not do is provide a less robust level of service, focus, attention for the cases where the damages are smaller. And there's a few reasons for that. One of them is I just have a high degree of professional pride. I have the standard of excellence that I expect for myself, that my clients expect for me. And so I don't have it in me to pull back in any way. I think an additional reason, though, is from the client's perspective. If there's a client whose market cap is a few hundred million, then that case and maybe their profits are only a few million annually, that case against them seeking $10-20 million, that's a bet the company case for them.
Oh, yeah.
In the same way that for a several billion-dollar market cap company, a case seeking billions of dollars is highly influential. So I tend to get brought in at a bet the company level, regardless of whether that's a small or a large company. And I will say, certainly the volume of hours that you put into a case needs to have some commensurate relationship with the scope of potential damages. You can't spend hours that collectively add up to $5 million worth of work in a case where there's only $5 million at stake. That's not efficient. That's not sensible. So there is scaling and calibration at that level, but that more just goes to how broadly you staff the matter, how many times you'll edit the brief to get it from a grade 97 to a grade 98 to a grade 99. Those sort of micro calibrations exist, but no, across the board, it's a very high standard of excellence and performance and actually results that we bring to the table here.
Of course, and wouldn't doubt that professionalism whatsoever, as much as, there's question marks when looking at hundreds of millions, billions of dollar type of disputes and what that world looks like. So just wanted to paint that picture a little bit for the audience. What about the contrast from working with a Google and working with a startup in a virtually new vertical? So we're talking blockchain, Web3. There is not as much due diligence research available. It's a shorter timeline that these organizations have been in existence. How are you able to roadmap where the discussion goes in a world of, to some extent, uncertainty?
I can address that at a couple levels. First of all, how is it different for me as the outside legal service provider? First of all, within very broad organizations, you may not always be talking to the most senior lawyer on that team. They may have a general counsel who's responsible for all legal affairs, and then they may have a deputy general counsel who's responsible for litigation, and that may be your main point of contact at a day-to-day level in a broad organization, Fortune 500 companies, et cetera. By contrast, when you start working with startups, chances are they don't have a lawyer at all. And so you're working with the business professionals. Now, we work with business professionals for larger clients as well, but oftentimes that's either through or alongside their internal legal function. With the startup companies, it's really important when there's not a lawyer on the in-house side receiving the advice to make it heavily concentrated and crystallized in a way that's accessible and understandable for a non-lawyer. So even though I am a lawyer, I have a lot of other hats and functions that I wear just day to day. And so I'm an investor, I do angel work, I do some venture work, I do some real estate work. And so I try to bring that business mindset that I deploy on a day-to-day level just in my personal life, I also bring that business mindset to bear when I'm working really for all my clients, but it becomes especially punctuated when you're helping forge business strategies for the startup clients. Larger clients, their business strategies, by the time an issue gets to your plate as the outside lawyer, they've already been vetted 6 different ways, gone through the board. Whereas I was on a call with one of my startup clients just a few days ago where they had a really important business opportunity in terms of a potential licensing deal paired with an investment framework that was offered to them. And they just wanted to kick around valuation and options and negotiation strategy. And I said to them a few times during the conversation, yeah, so this isn't really legal advice, the following, but here's what I would do at a business level. And at the end of the conversation, it was kind of gratifying. He said to me, "You're much more than a lawyer." And I thought, even as much as I love being a lawyer, being able to provide that additional value add in terms of business sensibilities really was rewarding, and hearing it echoed in that way was empowering.
And that's been my experience as well, but both in our conversations and dealing with the legal community here in Los Angeles, where we're a part of the whole entrepreneur world ecosystem, if you will, and being able to bring that type of expertise of the business side of things. Hey, I haven't experienced in this vertical, but this is how it typically rolls out for small businesses and those that experience accelerated growth. So I definitely see how you bring that to the table and imagine what those conversations look like with your clients on a day-to-day basis. Some of my listeners, some of my viewers are in the digital asset space. I mentioned the word blockchain. Years back, there were different types of successes in the forms of crowd sales. And I'm not even going to talk about the acronyms and how everything has evolved. But there were top banks, I believe some top legal firms involved, and some of the directions that they followed ended up creating issues for them down the line. And I've seen it happen in a variety of different formats. I've seen celebrities involved. I mean, I think last year, in 2022, most of the Super Bowl commercials, I shouldn't say most, there's 7 or 8 Super Bowl commercials, and even some of the actors, some of the talent, some of the endorsements that were made ended up creating legal, let's say, question marks for those that are involved. What does it mean to operate in that type of industry? How can one effectively prepare for the roads ahead?
Yeah, and I'll answer that both as the outside lawyer, but also I'm always trying to put myself in my client's shoes. And so I'll also answer it more from the business perspective. Look, as an outside lawyer that's providing services in this space, there are a couple, I would say, more advanced due diligence steps that we like to take in terms of making sure that if someone comes across as a potential client or as a potential counterparty, we are ensuring that they aren't involved in any potential misconduct or any areas that may attract scrutiny, just because we know that this is a newer area. And when there's a new area, sometimes bad actors will try to use that new area as a platform for doing something wrong. So we will be very proactive in ensuring, okay, somebody's coming to us. Are they legit? Do they have a real business plan? Do they have an appropriate mentality for interacting with the public? And that's not something that's necessarily different from when other new clients come to the door, but it is something that we pay a special attention to in this context. Now, I think more interesting, though, is from the operator's perspective, from the business's perspective, how those who are building their entire business around a new and emerging and unclearly regulated technology can best insulate themselves from risk. And I know I alluded to it earlier, but in addition to having a very robust and wide-ranging litigation practice, I also have a more concentrated advisory practice, limited largely to the blockchain and digital asset industry. So this question of how do I help clients, maybe they're building a new product in blockchain, maybe they are using a pre-existing, maybe they have a pre-existing product, but then they're layering on top of it some kind of blockchain integration or implementation. Maybe they're an investor who has other investment strategies other than blockchain, but now they want to onboard a digital asset investment strategy. In those conversations, which is often about product development or product expansion, the questions that I oftentimes get are, can we do this legally in this jurisdiction? If we can do this legally in this jurisdiction, what kind of guardrails, safeguards, and protections can we put in place, given some of the environmental uncertainty, especially from a regulatory perspective around blockchain? How can we best ensure that what we are doing will not attract enforcement scrutiny, regulatory scrutiny, litigation scrutiny, etc.? And so there, it's a heavily practical mindset that informs the answer to those questions, because it's not as though, now if we were in Europe, it would be different. There would, in many European contexts, there's a standalone statute or standalone regulatory architecture devoted specifically to this new blockchain technology. And so I'm oversimplifying, but there's a chance that you can go to a codification section of the statute and find exactly where your product fits, and then you can implement your product strategy or your services strategy based on that. Here in the United States, both at the federal level and within the states, because many states have their own structures around this, it's more of a process of analogizing to other products. Oftentimes, if there's a risk that a certain digital asset product could be characterized as a security, we will be, in our advice, analogizing to traditional securities products. On the other hand, if the product or service looks a lot more like a standard money transmission business, then there's a pre-existing state-by-state statutory framework that would apply to that and go across the board. But it's more a process of finding the closest fit, being reasonable and appropriately conservative without harming business objectives in tailoring the product or service to align with that fit. And then this is important, doing frequent checkbacks and touch points with the client. I was just chatting over the email with a client a few days ago where a recent development had occurred in relevant enforcement context. And so I chatted with the client and said, hey, you want to do just a quick touch base? Certainly the instincts that we had 6 months ago, they're still valid, but might be worthwhile to revisit and just make sure that there isn't an update or recalibration needed in light of what just happened over there that we all know about. It's just a matter of re-updating and re-enhancing the advice to ensure that it stays current. That's not something you have to do where the law is very static and has existed for decades or even centuries. It is something that's really important to do in this more emerging and developing context.
Well, and it's such an important topic because as a founder, you could be going in thinking you're doing all the right things and then find yourself in a situation like that years to come as the space is evolving. I mean, there's still gray area question marks in terms of what's happening with the exchanges. And there has not been, official finite concrete rules to work off of with, regulation A for some of the tokenized assets. From my understanding and experience, we've seen a lot of companies prepare to launch something there. I want to get into that a little bit, but you pointed out something about international, and it must be such a complex landscape to really decipher. A lot of these groups are operating in Asia, Europe, Caribbean, Dubai, and being able to make sure everything is above water in each of those jurisdictions. Are you working with other groups to coordinate that and make sure you're getting all of the right real-time intel, as you're mentioning, on an ongoing basis?
Yeah, and part of what we will do is we want to help the client answer there's a chicken and egg problem here, I guess, because you don't know which jurisdiction to get really smart on unless you know that you actually care about that jurisdiction. So oftentimes clients will come to us with the very blank slate question, which is, where should I set up by way of my articles of incorporation or articles of organization? Where should I set up by way of my operating entities? And those oftentimes the answer to those questions are oftentimes different for a variety of reasons. And so one thing that we've done is, And it, again, constantly revisiting it. It's never perfect, but we have a body of material where we've surveyed the landscape in almost all, if not all, of the usual suspect jurisdictions for emerging technology, especially fintech and blockchain. The ones in Asia, the ones in the Middle East, the ones in the West, the ones in Europe, across the board. And then when clients come to us and say, okay, these are my business objectives, these are my product expectations, this is my potential user base, my customer base, the third parties with whom I anticipate interacting, we can then layer that through our rubric, our framework, and say, based on all that, you probably want to go into these 4 jurisdictions, or here are some advantages and levers that you can pull relative to various jurisdictions. We then do not provide the advice in the, for example, if we say you should be in Cayman, we are not Cayman lawyers. We say you should be in Luxembourg, we are not Luxembourg lawyers. But what we do have is a really strong network of relationships with lawyers that are based in those jurisdictions. And then we will do a seamless referral. We work very well with them, and clients have been, for us, it's easy because we just work with these law firms every day. Clients are often surprised that we have this network, but it's something that we've developed over the decades of our experience, including working for traditional financial clients and a wide range of other clients. Those same groups have blockchain focused practices that have been quite influential and helpful for our client base.
Absolutely. And you know, it's funny because blockchain's built on trust and transparency, yet there's question marks from non-endemic audiences in terms of, is it, you know, littered with scams? And, you know, bringing the legal component into this, I think, should be part of every discussion. And from day one, not, you know, a later part of the equation. I'm such a big fan of creating that universal sense of understanding of what a deal is. We do a lot of equity crowdfunding campaigns, usually using Regulation CF, which allows for up to 5 million from both accredited and retail audiences. Regulation A, which I briefly touched on earlier, the type of Reg A campaigns we work on have a $75 million per filing year cap, and then Reg D, accredited investors, Reg S being a similar type of filing for international audiences. And that opens up the ability to use digital marketing tools. There are guidelines and rules around it, but we want to make sure that the founder, the issuer, is speaking clearly to the audience. There is not any type of overhype or facade around what they do. The terms have been democratized and available at the same levels for each investor. And following every bit of this to a T can be difficult, and really legal needs to play a you know, hand-in-hand role in those type of initiatives, in those type of activities. What are your thoughts towards these filings? Have they been successful in your eyes for entrepreneurs and investors who want to get involved early stage, want to be able to participate at the private level, you know, at these lower valuations as the companies are then primed for growth? And where do you think the space is going? Where do you think the, you know, evolutions can occur?
So first of all, yes, I think these tools, you rattled off the main exemptions: Reg A, Reg D, Reg S, Reg CF. There are a few others, and there are some subsets within those. Those are the key mechanisms to effectuate unregistered offerings of securities. And it's funny because within the blockchain space, there is oftentimes a very conservative approach that's implemented by players, where on the one hand, they would take the view that the digital asset itself is not a security, but, and we see this concept endorsed recently by the court in the Southern District of New York in the Ripple case, that maybe certain contexts and maybe certain transactional settings around that digital asset could give rise to a securities contract. And so we do see a lot of players, just to take the issue off the table, structure their digital asset issuances as exempt securities offerings. And within the litany of different exemptions that exist, there is quite a high degree of flexibility to access the right capital markets. Is it perfect? Of course not. In terms of where would I predict the market going, I actually don't anticipate, for example, everybody rushing to CF or everybody pulling away from CF. I was having a conversation with a state regulator, actually two state regulators in two different states earlier this week, where they were opining on the strengths and weaknesses of their state-specific securities regimes, because oftentimes the states are overlooked from a fundraising perspective. People just think, I mean, this whole dialogue, we've been talking about the federal exemptions, but for purely intra-state raises, where the federal laws aren't as directly implicated, states have a wide range of different offerings as well. And so I think if I were to have to make a prediction as far as where we would see greater concentration and focus of attention, I think it would be further experimentation as states start to want to get in to a greater degree on this emerging technology in this emerging market. I think we will see businesses and folks that want to do issuances take greater advantage of some of those very customized solutions that states are currently building for this market.
And you touched on, I would say, the age-old discussion, maybe 7 years deep or so now, of utility versus security. You touched on XRP, on Ripple. There's also the conversation of tokenized assets. I was mentioning tokenized Regulation A campaigns, and that was thought to be the route. And then we saw campaigns get backed up and the filings and paperwork, just to paint some color to it. I know there's so many different aspects. Why is it so difficult to be able to get firm legal guidelines to these organizations, to these exchanges, to these founders who are trying to do everything right? And like you mentioned, that there's misconceptions in the world of blockchain at times. Why has it been such a daunting undertaking to be able to put out very specific rules to launch and follow?
Yeah, and to help my understanding of the question, are you focused on state or federal, or are you lumping both together there?
That's probably part of the problem, right? Lumping both together and even international on top of it.
Yeah, so I think at bottom, most of the critiques that get brought as far as an insufficiently clear regulatory environment within the United States are focused at the federal level. And I think there is a certain validity to those critiques. And I think part of your question goes to the why around that. And look, we live in it's been a great experiment for the past, whatever it is, 250 years of American history. We're doing a pretty cool thing here in America in terms of the form of government we have. One of the byproducts of the separation of powers, the bicameral legislature, and the heavily population responsive feature of our government is sometimes it can create gridlock, sometimes it can create barriers to moving quickly. And we are certainly seeing that within the blockchain infrastructure. I was at a conference recently attended by a number of federal lawmakers, and where those federal lawmakers presented on some of their initiatives, their legislative initiatives. And it was interesting to hear from them as far as where they felt their traction was most prominent and where they felt their traction was most limited. And I think they had a really practical and valid observation, which is they got a ton of different constituencies that are concerned with about a ton of different problems, everything from unemployment to wars to pollution to poverty. And within that set of priorities, making sure that the blockchain industry and the TradFi industry that's dipping its toes into blockchain have a very clear regulatory architecture is not at the top of the list. It might not be in the middle of the list. It might be on the bottom of the list.
Mm.
And so, yeah, the answer is not really a legal one. The answer is not even really a political one as much as a product of our particular form of government, in my view. And again, that can be a good thing. If you talk about our form of government, sometimes it's good that things take a long time. I imagine that if the US government had in 2014 at a federal level instituted a comprehensive architecture to govern blockchain as it existed in 2014, we would be rewriting it in 2016, rewriting it in 2018, and having rewritten it several times in the meantime, because the field is growing at such a rapid pace. Eventually, there will be some kind of a calibration or equilibration regarding this technology, and hopefully by that time, the legislative apparatus will have caught up. But I try to take a realistic perspective on all this. I don't disagree when I hear that there is a level of regulatory uncertainty. I think that's very valid, but I try to put it in the broader context of all the great things that we have in this country.
Absolutely. And that's an excellent way to look at it. You know, we're focused on this conversation, utility versus security. How do we do this compliantly? And as you mentioned, hey, they want to, but these are all these other pieces involved there. I do believe the space will grow at an unprecedented rate once more of that certainty is there, because you know it's not the brightest path to go down for some different groups that are seeing success in other areas, and then looking to this area as more experimental. So I think that'll give us leaps and bounds. Even just on the marketing side, being able to work with publishers, that there can be a stigma in some cases around blockchain. So having more of that validation served, I think will be part of the next chapters for us all.
Makes sense.
Mm-hmm. Now, you get to work with groups that are founders. Many of my listeners are founders. What recommendations would you have for them as they're getting started? What type of tests should they incorporate towards their business model, you know, from the advisory perspective? What type of assurances do they need to keep into account on the legal side of things? What can you tell a founder in terms of formation in the earlier stages of their business to set them up for a safe, successful future?
I think one of the key things that gets overlooked in this discussion is having a lawyer as a trusted advisor from the very outset. And I see as the space, especially in blockchain, has matured, I see more clients and prospects starting to have an advisory committee from the very initiation of their idea. And allowing the lawyer to be part of the conversations early on is valuable, because it then informs, for example, your terms of service. If you have any sort of website traffic, it informs your standard NDAs that you're willing to enter into, which can, depending on how broad those are framed, can have repercussions down the road. It informs your employment contracts. It informs, as we talked about previously, which jurisdictions you choose to deploy and leverage. And I've encountered what I will say is a lot of folklore on all of those concepts. A lot of folklore where a business person heard an idea from a business person who heard it from a business person who heard it from a lawyer 4 years ago in a different geography. And that folklore then takes on a life of its own. And oftentimes it can be a very slight correction, a very slight refocusing of the folklore to what is actually relevant and actionable. But unless you have someone to pick up where the folklore veered off in the wrong direction, you can start to build things in a way that is not optimal, in a way that is ultimately non-compliant. And I've had to do this for clients where they're growing at a massive pace. Maybe they have a coin that had at one point a very low market cap, and then all of a sudden it's a very sizable market cap. And so they've been building everything while it's been under development and haven't yet had the chance to really get under the hood and in a systematic way set up a compliance structure or a comprehensive legal structure. And we can do that. We've gone in, we've built proposals for people to do that more retroactive retrofitting, but it's much cleaner and ultimately much less expensive if those decisions that have legal repercussions can be informed by a lawyer from the very outset. And I guess a related point is have a diversity of legal service providers. I think oftentimes there's a misperception that lawyers can be a one-stop shop. And I think if any lawyer is telling you they can be a one-stop shop, they probably have some blind spots because there's nobody that knows everything. And so I try to approach a lot of this world with a high degree of humility. There are lots of things that I don't know. And there are also lots of things where even if I do know, I may not be the most efficient, least expensive, most actionable solution for a client. So I'm very collaborative. I will oftentimes bring other lawyers at other firms in for certain pieces of work. And so, yeah, my advice for startups, and I'm going at this mostly from a legal function because that's where obviously my expertise and professional experience is to bring the lawyers in early, but don't get too attached and too embedded with one lawyer or with one firm. To the contrary, make sure that the lawyers with whom you're working are not trying to do it all and are bringing in the additional expertise and layers of perspective that will provide a fulsome experience and fulsome foundation for your growth.
And diversity. I really like that comment. My wife's a civil litigation attorney, and people try to ask her questions about 30 other areas of law. I think it's a joke in the legal community. It makes references to doctors and, hey, you have a shoulder injury, you're going to have to see a specialist, and be able to make sure the full team's there, if you will, on the legal side. What about optimization? You're doing your real-time feedback loops, international, federal, state. You're seeing different changes take place, and you need to make some optimizations. Some pivots are not uncommon to founders and inside and outside of legal. What is the best way to continue to refine, whether it's working and you're scaling, or whether it's not working right out of the gate and you're prepping the business for later growth?
I think being constantly in a state of challenging your assumptions is really important. I've seen a lot of businesses, they start out with an assumption, and it's a reasonable assumption at the time, and they will then grow with that assumption as a base layer framework for everything they do. And you only realize that your assumptions are outmoded, out of date, and no longer relevant after something breaks, unless you're proactively going back and looking at your assumptions. So from a legal perspective, for example, a lot of thresholds and a lot of triggers are tied to size, scale, breadth, things like that. And so you may build something that's perfectly compliant for a company that's at the startup stage. And then as certain parameters of their existence expand, whether that's in terms of numbers, geographic breadth, number of employees, number of customers, number of investors, you name it, some of those assumptions that animated appropriate structuring and appropriate advice at the time need to be recalibrated. So from the founder's perspective, I think it's important to not get too comfortable, and many founders are not, right? Many founders have this fire inside them that animates a lot of their development and growth. But if you have a blind spot to the need to constantly be pressure testing some of your base assumptions and base layers of building block, then you could find out almost when it's too late that wasn't the right way to go. And it's kind of funny because right now we have the Sam Bankman-Fried trial,
Yep.
criminal trial ongoing. And that was obviously a massive company. But once you get under the hood and you look at some of the details, for example, just a spreadsheet operating as the balance sheet with the ability to make changes here and there. I'm just going off what I've seen in the press and in the filings. That's an instance where if you every once in a while took a step back and said, okay, this thing that worked for us 3 years ago, does that still work for us now? Or do we need to revisit? I think that's pretty important from an optimization perspective.
Not working off that folklore from that hearsay legal viewpoint 4 years back. And yeah, the FTX situation, I think, is showing transparency across the board and allowing us to build in stronger ways. Speaking of building, what about scale? Any tips, any examples towards scale? You've worked with very notable large organizations in this space. What does it look like on the legal side? What does it look like on the advisory role in those conversations? Any insights that you can share with listeners, with viewers today?
One thing I will say is when you are in scale mode, there can, and I've seen this as a litigator, one thing you have the pleasure of doing, you might call it pleasure, is going back and reviewing entire years of communications about certain topics. And so in that, you can start to get a sense for the mentalities of the individuals. And especially when things go colossally wrong, it's almost like watching a play and seeing a precursor, a premonition before it actually plays out. You can see that there's a mindset that needs to be challenged, that needs to be revisited. And so, for example, if you're in growth mode, you may assume, oh yeah, we've been growing at 5% every year, or maybe it's even more aggressive. We've been growing at 15% every year. We are going to be able to make our projections and make all of our forecasting based on that continued 15% annualized growth. And once if you scale according to that calculation, if you're even 2 or 3 percentage points off, you may have overhired, you may have overexpanded, you may have over leveraged. And I think being able to be nimble and be very data driven in saying, oh, well, we thought we were going to be growing at 15% annually, but if we look at just these first couple months of this year, the growth rate is actually trending towards 8% annually, and not just saying, okay, well, we're just going to work harder and we're going to make up the difference in the last 10 months of the year. That's not the way successful businesses get to scale. Recognizing that, yeah, you're still growing, but maybe your growth trajectory is not as massive. It could be just because that's an indication of market saturation and the fact that you've arrived. It could be a function of more external forces. Maybe the market just isn't as positive as it was previously. But I've seen the scaling work really, really well when you don't just go in and assume, okay, well, the scaling is going to happen because it's going to happen because it happened in the past. No. Scaling is something that, again, is a function of constant recalibration, constant reassessment. And also, there are certain, I would call them incremental events in a company's life cycle. Maybe it's an acquisition, maybe it's a joint venture, maybe it's some kind of other integration or transaction. Being able to not put blinders on to the possibility of those outcomes and not just get stuck in your lane, but actually being in the community, being in the broader business world, and being open and creating a platform for those opportunities to come in the door. Those have been, I mean, it's kind of funny, in many contexts that I've seen, it's the stuff that these companies didn't expect. It's the inbound that no one even thought was going to happen that have been the cause of the biggest growth in their trajectory. So leaving doors open, having a broad network, these are all things that founders do anyway by their very nature. But sometimes once they're in the groove they get so dug in that groove, which is a great groove, that they forget to get out of the groove every once in a while. And so my suggestion as scale is keep all of that stuff that was such a great engine for the initial traction for your business. Keep all of those practices in play and keep the world open for yourself.
I'm hearing a meticulous model that is not assuming that growth is just going to occur. You know all of the right building blocks you're going to use to get there, what you're going to scale. For us, it's advertising, content marketing, outreach. We're seeing that work and ramping that up, but also leaving the door open for that inbound, for those partnerships, being in the listening for the opportunities and jumping on those.
Yeah, I agree.
Awesome. And listeners, viewers, as Mark's speaking about this, keep in mind, as he was mentioning some of the brands he works with earlier, hundreds of millions, billions, being on both sides, that's what's in the background. That's where all of these findings and perspectives come from.
Right.
Mark, as we begin to wrap up, any final thoughts you want to leave listeners with? And what are the best ways for them to get in contact with you or learn more about your advisory, your legal firm, organizations that you're a part of?
Absolutely. So I'll give those contact right away, and then I'll answer the wrap-up question. My firm, as I mentioned, Ropes and Gray. If you search my name, Mark Cianci, Cianci, you'll find my bio, which has all my contact information. I'm also on Twitter, Mark A. Cianci. I'm on Instagram, Mark A. Cianci. LinkedIn, which I think is Mark A. Cianci. Either that or Mark Cianci. So I kind of have a unusual last name. It's not that hard to find me, and that's the best way to do so. And I'm pretty active on all of those social media and influencer platforms. I get a lot of value from that. But the good old website, which has the old-fashioned telephone number and email, is also a good way to find me. Now, to answer your wrap-up question, I'm actually going to go back to a topic that when we were prepping for this podcast earlier this week, you asked me, which is what would I consider my greatest successes? And I kind of stumbled over that answer in our prep meeting, but I'm a person who likes to sleep on it. And even though I haven't slept a lot this week, I've slept enough to have a more reflective answer, which is I actually think if I had to pinpoint my greatest success as a professional, it certainly can't be isolated to one event. It's more who I am than what I've done. And I think it's who I've been able to be as a mentor for others. It's kind of funny to think of myself as a mentor because I'm still a mentee. I was emailing someone earlier today and I thanked them for their mentorship of me. So I'm still a mentee in many senses. But being able to be a mentor for more junior attorneys, as well as now that I do a lot of blockchain work, just more junior people in the blockchain space, business professionals, advisors, and else, and having the background and experience where when I say, oh, you may want to think about this tweak or you may want to think about this angle, it's not just me shooting from the hip, it's me having lived through it and maybe lived through it with a painful result, either in my own ventures or working with someone else who had a painful result. That, I think, is my greatest success, is having a platform of experience where I can actually then go and mentor others who are trying to do good in this world. I think there's a ton of good, to bring it back to blockchain. I think there's a ton of good that this blockchain technology can effectuate from the perspective of minimizing some of the more oppressive governmental regimes in the world and minimizing their stranglehold on their communities, enhancing the poverty mitigation aspects of our financial infrastructure, promoting positive free speech around the world. There's so much that blockchain can do. And so being able to help develop a more mature experience and help others promote the growth of that industry is really powerful as well.
And could attest to it firsthand. I've taken from our conversations, even just our prep this week, as well as at the brief convention. And Mark, you're a very much a thought leader a real thought leader in the space. So beyond legal into advisory, and even just for who you are in the ecosystem, applaud that. And want to thank you as well for taking time to hop on the podcast. I can imagine the demanding schedule of a lawyer, and with litigation and all the different pieces going on. So really want to let you know we appreciate you taking the time to hop on the show here today.
Thank you for the opportunity, Jason. It's been a real pleasure.
Thanks, Mark. And want to thank everybody for tuning in. We will see you next time.